Hi everybody, my name is Michael and I'm a full-time trader at True Traders, and I want to show you how I'm using double tops and double bottoms in my trading. I have previous recorded a video where I show my complete day trading strategy, and in that strategy double tops and double bottoms is a part of it. You can go through my videos and see that as well. But now let's dive into how I use double tops and double bottoms. And I want to show you it on the 5 minute, on the 1 hour, and the 4 hour time frame, because it's a bit different of a time frame you're using. The lower time frame, the more difficult it is because you have less time to think, you have less time to react, and all goes a bit faster. When you go to the 4 hour, you have more time to make a decision. But of course, higher time frame, the lesser opportunities. But let's start with the 5 minute. I want to show both what I consider as a good double tops and double bottoms, and also which double tops and double bottoms I wouldn't take myself. So let's start with those with one I would take. I will take this one arrow here to show what I mean. And I also use the RSI as an extra confluence for why not to enter a double bottom or why to enter it, and double tops of course. You can see here we have this one and this one here. This here is double tops, and I have the confirmation down here on the RSI is making bearish divergence. A little extra confluence is this, that the price goes up to this resistance area. See, price goes down and then up, which often means that there comes some kind of reaction. And here we got it. So where would I enter? Well, there are two ways to enter. You can take the more aggressive approach, enter right here, put your stop loss above the resistance area, enter right here at the candle close, and then I would aim for the first resistance at the bottom down here. Or you can take the more conservative approach, which means that, put this here away, which means that you have this whole range here, and now here you have this is a kind of support level, market structure, you can also call it. So when the price is breaking market structure or breaking the support level right here, then this here would be a safer entry. Again, put your stop loss up here and have your take profit above the first support down here or above this wick here. It is of course a lesser R&R trade, but it's a more safe and higher probability trade. That's up to you with your risk management profile, how aggressive and how conservative you want to be. Yeah. And here, for example, this here is also a kind of double bottoms, but these I wouldn't take. First of all, it's more like a support area here, and you can see down here, the RSI is in the middle of everything. There's no really clear bullish divergence. So this here would be a no-go for me. These trades here, they are more obvious. First of all, you have the double bottom. And some people would say, well, Michael, this here is not a double bottom. This here is a liquidity grab, a swing failure pattern, probably some other names for it too. You can see here price goes down. It doesn't stop exactly here at the previous candle wick, but that doesn't matter for me. I look more in the larger context of it. Price goes down, it rejects around this area, goes back up. That is for me good enough. And also we have a bullish divergence down here. Here again, here's even more clear example. You can see here, double bottom, the bullish divergence is even more clear, easier to spot. And I would wait for price to break this resistance area here, break the market structure, either enter at the first or take the more safer approach, wait for the pullback here, and enter when price starts to go up. I know on YouTube I've seen my share of double tops and double bottoms video. For some reason, many YouTubers tend to overplay it, over exaggerate it, how good they are. And they will say, oh, look here, here is a double bottom, enter here, stop loss below the wick. And look here, we have a 15, 20 R&R trade. Everything is perfect. But this here doesn't work. It's just a marketing, because how in earth will anybody know that when price comes down here, the price will stop? You can easily just continue down. You need some kind of confirmation, because otherwise everything is a double top and bottom, but you need the confirmation. I hope you understand what I mean. If not, then write in the comments and I'll be happy to explain it. So yes, let's take a few more examples. On the 5 hour, before we go next to the higher time frame, here is also a good example. I have here the first one, and here is the double top. You can see here this wick here, this wick here doesn't go up and it completely matches this one. It's the same way I trade like down here where it doesn't match. It's not important to me, because if you're always waiting for picture perfect tradings opportunities, well, you either have to wait for a long time or you put too much bias in it and forget to use the context of the price action, use the RSI or whatever confirmation you're using extra. Here we have the RSI is here. RSI again showing bearish divergence. And I know some will say, but Michael, the bearish divergence is not confirmed because price didn't go higher. I know. But for me, the context in this is a good double top. That is my way. Here, I want to show a last example on 5 minutes before I move on. Here again, if the price is in a bit of range here, the RSI doesn't give any confirmation for why this here should be the entry. And you can see here it's in a range. Price, yeah, I'll show it a bit more visually. Sorry. Let's see here. Price is in a little range here. Something like this. Price break out of the range, pull back to a retest, and the retest is the double bottom. And the same way we have a very good and clear bullish divergence. This here I would enter, yeah, right at the candle close, or maybe on the way up because it's a good confirmation. So this was the 5 hour and the more difficult time frame to trade double tops and double bottoms. So let's try the 1 hour and see the examples here. I'll start with the current price action. So here are the first one. Take the other side down so we can see that too. Here are the first one. We have price is rejecting up here. You can see here I have this high here, and I have also marked out this high here. So I have this high that it broke, and I have this high here, and I will show how I use that. So first it breaks up, make a top, and here we have the double top. And we have here down here on the RSI, you can see there is a bearish divergence. And how I would manage this trade, there's two ways to do it. There again, the conservative way and the more aggressive way. Since that we are breaking a very good resistance up here from the previous high, I would enter here at the candle close, but I would put my stop loss above the other high, as you can see here. Here the other high, because then I have some wiggle room, and I don't want to be greedy. I want to have my take profit not lower than this one here. Put a bit in context again. I have this here, sorry. This here is a good support area. And there's no need to be greedy and put your take profit down here. Put it a little bit above here. And then you still here have a good 1.5 ANA trade. Or you can choose to be more graphic, put your stop loss just above here. Of course, give a much better ratio. But again, also higher risk that the price when you enter here just would wake up and take you out. A more conservative way would be to wait for break of this structure here. So let's move on to the next example. Yeah, down here is also a double top, a very clean one, but this one here I wouldn't take, and I will explain you why. Here, technically, exact double bottom, but the RSI is not showing clear divergence, clear bearish divergence on this one. On the opposite, you have here and here. Sorry, you have bearish divergence. So that would, in my eyes, contradict, you can say, yeah. That would mean that this here is not a safe trade. This is lower probabilities because you have the bullish divergence up here, price goes down, and also here, I simply don't see this here as a good divergence. This here is too gray area for me. So this kind of double bottom I wouldn't take. Let's see, let's take some more examples here on the 1 hour. These are more clear. We have from here to here, double tops. We have the bearish divergence down here. Again, here to here, double tops, bearish divergence down here. Another confirmation is that all this price action here, probably something like this. Yeah, from this candle close to the wick. You can see that this here is one big resistance area. And on this, it makes several double tops that is possible to trade from. Here is another good example of a very clean, there's a double bottom. And you have the range here. It is making double bottoms, yeah, all the way here. Yeah, this is the correct double bottom, but you have price in a range here. When the price breaks out of this range, it will be a good long entry. The last example here on the 1 hour. Here, here's the first one, and here's the double bottom. See down here, the bullish divergence. And again, don't be greedy with your take profit. Take the 1 RNR, 2 RNR, bank in some profit. Then this strategy, this way of trading can easily be your butter on your bread to pay your bills. Instead of going for the 10, 20 RNRs and get wrecked. Let's see, the last time frame is the 4 hour, which of course give lesser trades, but that doesn't really matter. You still get some good trades. Here are the first good opportunity. Again, simple approach. Here to here. RSI is making bullish divergence. Could argue that this here was also be a good entry, and it is. This is also a fine entry. You get bullish divergence from here to here. Up here, these I don't like. These are more a pullback up to resistance trade. And also you have the RSI is in the middle of everything. It's in no man's land. So these I wouldn't take these up here. Let's go to some more clear trades. First I'll start with this one. Very clear example of double bottoms here and here. And also if you want a bit more confirmation, you have the trend line right here. So when they break the trend line, you have the extra confirmation because you made a double bottom. Here, this is an example I want to show you. Here you have the RSI in the middle, and if you remember over here, I didn't want to trade it because the RSI in the middle, but here we have more context. We have more confluences is in the price action. You can see prices in a downtrend, and it's making lower highs, lower lows, and then you have this here, top here, and you have this top here. There is some bearish divergence down here, but RSI is in the middle of its range, so I don't put so much effort, like I don't put so much meaning or importance in this one. What I do put importance in is the price action. Downtrend, it makes a pullback up, and the same way, at the same time as a pullback, it makes a double top and makes a good rejection candle, so you can enter right here. Put your stop loss. I would say I'll have the stop loss above here, and I'll also have a little bit above this small resistance area. And where would we place? Yeah, down here, if that makes sense. I would place this here is the first resistance area. So my stop loss would be a little bit above that. Sorry, my take profit would be a little bit above the support level here. And yeah, and that would be it. So this is how I trade double tops and double bottoms. As I mentioned in the start of the video, is a part of my complete day trading strategy, where I use different tools to get more options for trading, more possibilities, more setups. And that also means that when I use a variety of tools, that I can choose to be more picky with my trades. But if you want to watch more of my
Tell them how you're feeling, Ems.